In today's video, we ask if young drivers are being priced off the road due to the high cost of motor insurance, and also set out practical steps that can be taken to find the best insurance deals for those aged between 17 and 25. So buckle up and let's get started. Recent consumer reports and newspaper articles have shown an alarming rise in premiums for young drivers, with the biggest change that affects 17 and 18-year-olds, showing average premiums now at a staggering £3,000 per year. Needless to say, this means driving is becoming increasingly unaffordable for many young people, with 51% admitting they may no longer be able to afford to drive. However, let's look at what can be done to help. Firstly, all motor insurance in the UK includes what's called Insurance Premium Tax, or IPT, which is a tax charged by government at a standard rate of 12%. Back in 1994, the rate of IPT was just 2.5%, but this has increased in recent years from 6% in 2015 to the current rate of 12%. This means that based on average premiums for 17 to 24-year-olds, the tax is costing young drivers between £180 to £400 a year. As the revenue the government makes from the IPT tax has increased hugely in the last few years, being up to £7.3 billion last year, we call upon the UK government to reduce or scrap the tax for young drivers. If you agree, then share this video and let's build momentum on this issue. Crucially, it should not affect the premiums of older drivers, as any tax shortfall to government could be made up in other ways. Second, from a list produced by CarWow, as well as other motoring publications, young drivers should aim to choose a vehicle from the following list of the cheapest to insure. Our choices would be the Toyota Aygo, Hyundai i10, Kia Picanto, Renault Clio, or Skoda Fabia. Surprisingly, cars such as the Vauxhall Corsa are not included here due to high numbers of vehicles succumbing to what's known as car cannibalism, where entire front sections of popular vehicles are removed by thieves in order for parts to be used to crash repair other vehicles. So while some Ford and Vauxhall models have more plentiful and cheaper parts supply than Japanese or Korean cars, any savings are offset by higher insurance risks. Next up, although telematics insurance policies are actually becoming harder to secure than a few years back, companies such as Marmalade continue to offer black box solutions. This is where a telematics unit records how a younger driver performs on the road, with their policies being aimed at learner, student, and young drivers. What we like about their solutions, and we're not receiving any form of financial reward to say this, is that they offer youngest named driver policies, pay-as-you-go options, and even weekly student rates. Their rates still aren't cheap, but Marmalade is particularly useful for parents wanting to teach their kids to drive, or for students who only want to pay for the miles they cover. Having an older named driver on your policy may also secure a discount on your car insurance, while carefully choosing how you list your profession may also lower your premiums. For example, a security officer would be more highly rated than security guard, or an admin officer rather than a clerk. It's important to stress that you should not lie about your profession, but instead make sure that what you've selected accurately reflects what you do. Although in the UK it's now law that insurers can't charge existing customers more than newbies, most policyholders can still save money by switching providers. So avoid auto-renewing, as your loyalty won't necessarily see tangible rewards. In fact, that's rarely the case nowadays. The best time to get car insurance quotes is 20 to 26 days before you need the policy to start, while ensuring that also you're on the electoral roll at a given address may help, just as it does for spending limits on credit card accounts. Finally, due to the high cost of cover, many young drivers are inclined to spread the cost of their insurance. But be careful. Making monthly payments means taking out a high-interest loan from your provider, sometimes with APRs of more than 30%. So check details about payment obligations carefully before buying. If you've enjoyed this video, tell us which topics you'd like to see featured. And don't forget to like and subscribe. It takes just a second and helps us to create new content.